gentlemen, good day and welcome to the Harsha Engineers International Limited Q3 FY24 Analyst and Investors Conference Call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Rangwala, CEO from Harsha Engineers International Limited. Thank you and over to you, sir.
Thank you and dear all, welcome to you in our Quarter 3 Financial Year 2024 Investor Call. As per our normal practice, our CFO, Mr. Maulik Jasani, will take you through the numbers in greater detail. But I presume most of you would have had a chance to go through the same. As indicated by me in Quarter 2 Investor Call, I'm really happy to report that Quarter 3 results are in line with our expectations. Though the consolidated top line for Q3 looks well flattish as compared to the previous quarter, there is a noticeable improvement in the business undercurrent as well as the profitability of both India level as well as our key global subsidiaries in China and Romania. As a conscious strategy implemented in Romania and China for cost cutting, we have started seeing a positive outcome in terms of improved margin in both these subsidiaries. Thus, while China has reported a positive EBITDA and a PAT, there is a marked reduction in operating net loss in Romania, so that on a consolidated performance of both these subsidiaries, practically there is no loss in current quarter. We had definitely expected at least the same or maybe a slightly improved position in Quarter 4, so that as per plan indicated earlier, we should be in position to arrest the combined losses of international subsidiaries at H2 level and in fact maybe reduce slightly in Q4 when we expect the situation to improve in Romania. This is in wake of an early sign of improvement in the wind market that we have started to witness in Quarter 3, and we believe that in Quarter 4 there should be some further improvement in the offtake and financial year 24-25, and hopefully wind market should return to its earlier normal levels. In India, our engineering business in Quarter 3 saw a slight dip in our top line, which is more cyclical in nature, not reflecting any particular structural trend, except for the slight softening of demand in industrial segment of products and similar things what we talked about, softening of or continued softening of Europe and China. However, there is a distinct improvement in EBITDA and PAT margins in Quarter 3, partly owing to positive impact of pass-through of the increased raw material cost and partly to the quarter-end inventory adjustment. Again, we are continuing to work on several outsourcing and development opportunities, which is evident from the fact that in 9 months period leading up to December 23, we have completed the development of more than 200 SKUs and current development as well as inquiry pipeline continues to be very robust. Again, this quarter we have started to witness a distinct firming up of the bronze bushing business visibly in terms of order that we have started to receive, whose impact will start coming up in Quarter 4 financial year 24 as well as next year 24-25. The stamping business is also reporting a decent growth. Further, though the new business offtake of large size bearing cages and business from Japan-based customer is slightly muted during this 9-month period, ending December 2023. And we firmly believe that this will start catching up in coming quarters, and we remain committed and bullish in as much as the prospect of these segments are concerned. Thus, at India level,
Hello. So please go ahead, sir.
Yes. Yeah, thank you. So thus at India level also, quarter 4 should definitely look better. And as indicated earlier, we should be back on track of normal growth in India as well as for financial year 24-25. As far as solar business is concerned, there is a positive push coming in wake of favorable renewable energy policy from government of Gujarat, which encourages both industrial as well as domestic solar rooftop projects. As a fallout, we are seeing positive growth on the top line, as well as our continued focus on making solar a sustainable business is also showing up in the bottom line in current quarter. However, as indicated earlier, there is no material additional capital allocated to this business. I wish to express my sincere thanks to all our investors for continuing to extend their support and for their continued confidence in our long-term growth story. With that, I pass it to Maulik to talk about numbers. Thank you very much.
Thank you, Vishal, for the business overview. Hello, everyone, and good afternoon. For the quarter ended December 23, for our engineering business at consolidated level, we have achieved a top line of rupees 278 crore against top line of rupees 298 crore in the immediately previous quarter, and almost similar top line of 297 crore in the same quarter last year. We have achieved consolidated EBITDA for our engineering business at 48.5 crore for the current quarter against 40.5 crore in the previous quarter and 54.9 crore in the last year's same quarter, Q3. Major impacts on top line are on account of the weaker export demand and on improved EBITDA, owing to cost control measure coupled with improved realization due to RM pass-through, as discussed by Vishal. In our solar business, we have achieved EBITDA of 2.3 crore in the current quarter. While our overall working capital cycle at consolidated level remain at 139 days against 144 days in the previous year, quarter 3. With this brief on the financial numbers, I hand it over the call to the operator to take up the Q&A from the participants. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Anwani from PL Capital. Please go ahead.
Hi, sir. Thanks for taking my question. My first question on the bronze bushing, you did highlight it, so that the wind market is coming back. So just wanted to understand what was the contribution from bushings this quarter. I recollect, I think H1 it was on a lower side. So what is the full year guidance? And now since things are reviving and we have been doing capex on bronze bushing, any revision in guidance or any outlook now you're seeing for FY25 on bronze bushings contribution?
So I will not be able to share the exact numbers for bronze bushing this quarter or for this year. Having said that, these are roughly in line with our expectation, what we had shared earlier. And we were expecting that some improvement which has actually taken place. Second part about next year, we are expecting significant growth. At this point in time, to give it an exact number would be difficult. However, we are seeing very bullish signs. With that, current indication is that significant growth.
All right. My next question on the subsidiaries, Romania and China. You did highlight it that there's an improvement which you have witnessed because of cost control and a few other things. Just wanted to understand, was there any improvement in offtake from Romania and the way we thought from past 4-6 quarters that the semi-finished product we will have better opportunity for the large cages getting sold off from that factory. So any sense, because we have seen the improvement after the 4-6 quarters of continuous expectation, now we are seeing some improvement. So can we see numbers improving quarter on quarter, or this is preliminary that we have to again wait and watch just to see the clear trend happening in these two subsidiaries?
So we believe that we would see improvement going forward on this. However, to definitely say, to be able to predict what is the market, how the economic situation develops in Europe, specifically, which is the market being served by our Romania facility, is extremely difficult. So, in general, I would say that yes, we are expecting positive direction going forward after, as you mentioned, a significant number of quarters of softening. But that's a certain understanding based on what our customers are talking us. We are seeing the wind market reviving and all that inputs.
So lastly, sir, on any guidance revision for FY24 on revenue and margin, and any guidance for next year?
So, as Vishal explained, in Romania, if we don't have any further losses even in the second half, that would mean that whatever losses we've incurred between Romania and China at around a level of around 14-15 crores will remain in the current year, and it should go away in the next year. And India continuing to do as it is, we think that in Q4, the run rate of consolidated PAT should improve marginally, and in next year, at least a 10 to 15% overall growth can be expected at India level, which would mean that on a consolidated basis, assuming that there is no loss in China and Romania and no positive contribution, we should expect a much more aggressive, more than 20% bottom line growth overall in FY24-25. I would say even little higher, more than about 20 to 25% bottom line growth next year. This is what we believe is definitely deliverable, but let us see. This is a target, may not be taken as a guidance, but definitely we will revert by the end of the year.
Thank you, Sanjay bhai. All the best.
Yeah.
Thank you. The next question is from the line of Jason Soans from IDBI Capital. Please go ahead.
Yes, sir. Thanks for taking my question. So, sir, this quarter we have seen a good, healthy improvement in gross margin from around 42% last quarter to 45.9% for this quarter, and EBITDA margin also has seen good improvement in bearing cages or the engineering segment as well. Just wanted to know what exactly has gone. I mean, is there some raw material softness, or what exactly is the reason for this?
Yeah, so Two things. I believe you are talking about at a consolidated level.
That's right, sir. Yes.
Right. So at the consolidated level, it's two impact. One is material pass through, catching up finally, because we have seen a lot of volatility over last year and a half on material prices, and there was always a significant lag both ways. So we think that it has now stabilized, and then the whole pass-through mechanism catching up to the reality. So that's one part of the improvement. The other part is some cost reduction, including material costs and other things we started working on in our subsidiary level, and rescaling the operations at those subsidiaries to the current market situation. The combination of that has given the overall at consolidated the margin improvements you are looking at.
Sure, sir. And sir, also what I wanted to understand is you mentioned in the presentation that the bearing cages cycle has been weak. Now, one of your competitors or one of the players in the industry, they have also mentioned and spoken about some weakness in the domestic bearing capex cycle as well, some weakness there. So just wanted to know your take on how do you look at the domestic bearing cages. Of course, there are strong plans, for various MNCs that to see sizable capex in India in terms of localization and other things as well. So just wanted to know how does your outlook on the bearing cages segment in that light?
For India, we see a decent, robust growth in India market. I will not be able to comment specific to what other companies have shared. Mm-hmm. However, from our perspective, Indian market remains strong, robust, one of our growth engine. Right now, it's pretty positive. We see that specifically in India, strong growth happening specifically in smaller automotive cages. So we are seeing two-wheeler demand, two-wheeler related demand also improving, and few other things happening there. So overall, we think that India is positive now. Most of my customer we work with, they have continued to invest in India for bearings, and I'm sure these customers, and they have their plans which are ongoing. So we see a pretty decent confidence that is happening. Maybe there might be a short-term trend of something which I'm not aware of.
So I think just to add, you mentioned about the capex cycles. I think the capex plans of all the big companies are absolutely in line with what earlier we were talking about. So we don't see any deferment or postponement of those capex cycles, to my mind. Mm-hmm. Again, that's more a function of their long-term strategy to position, their India additional capex as a China plus one kind of a global supply center. And therefore, from our standpoint as a cage corollary to their capex cycle, I think we remain bullish. I don't think we are really a problem. The only thing is, yes, a little softening right now on the industrial side. That's where the shoe pinches actually.
Okay. So currently there's a little softness on
everything else is okay. Yeah. Okay. A little bit on the industrial demand side.
Okay. Sure, sir. And sir, just you spoke about this automotive healthy volumes being in automotive. Just wanted to know in terms of course, the EV transition is in space, and two-wheelers are the first to go up that ladder, first two-wheelers. So are we ready in terms of bearing cage solutions for providing to EV vehicles as well?
So yes, definitely. We have worked on a few solutions when it comes to EV. If you look at two-wheelers, some of those ball bearings are the one which gets targeted in initial phase. And there we are, working on some of the EV bearings and plastic cages within that. So we are ready with that. We are working with some of our customers for developing those. These are going into some of the ceramic bearings as well, and so on. Other part of the solution is, low noise, low vibration cages, mainly driven by, low dirt content or high, extremely clean cages. And that also, we as a solution we provide to our customers. So we are working on various fronts when it comes to alternate solutions for cages which are better adapted to EV conversion. And that's an ongoing program with our customer we work on.
Sure. So there the same thing, probably volumes will get lesser, but realizations will go higher. That theme stands, right? Probably in these solutions for EVs.
Yeah, you're correct in terms of long term.
Yeah.
However, short term, we are seeing, significant opportunities that conversion is not yet taken place. And there is industry has to also build up the capability to deliver that. So we are part of that chain and working closely with our customer, and we're confident that we will continue to lead within that. And while we do this, we believe that overall volumes in India will grow to compensate for whatever reduction happens on account of EV. Because if bearings don't get eliminated, they just numbers get reduced and application changes. So we are ready for the application change and very confident of volume growth so that we can fulfill our capacity with this alternate demand. So that's where we are.
Okay, sure, sir. And sir, lastly, just wanted to know, in terms of capex, what exactly in which areas are we, investing this capex? Of course, you mentioned that your first phase is already you've started implementing it. So, in which areas are you investing?
Yeah. So, current investment we are doing in the large size bearings. One second, on the bushing side, we are investing, and the third is stamping component. That's our big investment. Fourth one, in line with the EV trend, the plastic cages is also area where we are continuing to invest. So these are some of the areas we are currently investing, as well as we are drawing up some further plans of investment for the long-term growth.
Okay, and sir, amount will be how much for FY25-26? Okay. The capex size?
24-25.
Yeah, 25 for FY25.
Yes. So for 25, we are anticipating about 100 crore or odd investment. So that's the rough plan. We are firming up that and may increase depending on how fast the market develops and how we see the demand developing. Then we may have to firm up those maybe a little earlier, and maybe amount may increase a little bit. But right now, we are working with an approximate number of that 100 crore.
100 crore. Okay, sure. Thanks.
Thank you.
Thank you.
Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, to ask a question, you may press star and 1 on a touch-tone telephone. Our next question is from the line of Harsha Patel from Equirus Securities. Please go ahead.
For the opportunity, sir. So my first question is, our engineering business has broadly 3 parts: what we produce in India and sell in India, Second, what we produce in India and sell outside. And third, what we produce outside and sell outside. So could you give us a sense on how the volumes have panned out in each of these three parts for the first 9 months of FY24? So where the volumes have grown higher than the other, how has been the overall movement, whether it's a growth or a decline for the first 9 months?
It is. I can surely share one thing. Overall there is a decline this year. Now on a macro level, there are micro trends within those each segment and product lines and different things going on. From India to India, so if I follow the segments you have created for us, if I talk about India to India, that is actually positively grown on volume side the 9 months this year. And India to outside and outside to outside, or what you call, so all that has actually degrown. Primarily, you can see that Europe and China as an economy there is a degrowth. At least we believe that's the case, and we are seeing a reduction in volume going to those locations. Basically, demand has softened significantly. So that's the general trend. Overall, considering Europe, China are very big market for us. Obviously, overall, we may see, or we have seen a little bit of degrowth on a macro level. We are still hopeful of flattish finish to this year, but let's see.
So just to add India to outside volume, while first thing I want to qualify that exact volume is a misnomer in our case, but going by the generality of the concept, assuming that yes, we are talking of general directional volume numbers, India to India, as Vishal explained, is good, not negative but positive, but India to outside is little negative. What exact quantification? Not possible. But Europe to Europe, Romania to Romania is a more significant dip, at least 15-20%. And even China to China is about at least 10%. I mean, this is just again putting numbers on the top of the head. If you ask me to statistically prove, because of the volume itself being a misnomer in our case is difficult. But just to give you a direction.
So understood, sir. Very, very well taken, sir. That is quite clear. And so this pricing trend would be negative in all these three aspects, right?
Pricing, because of the raw material. It is also a function of pass-through.
Yes, sir.
So, yeah, it is. Yeah. So we have seen, to answer that specific question, we have seen a lot of volatility with the reduction coming in 23. However, I think we have also seen a spikes in the raw material prices and other things. So ultimately, as I said, even in December quarter or quarter 3, we have seen that fluctuation stabilizing. And some of the impact of that happening. So in general, you are right, but I would say there might be a little bit of volatility within that. For example, steel prices are reducing, but then the brass, copper, zinc prices are trending up now. So all those things are happening. So difficult to exactly point out a single trend there.
Understood, sir. So my second question is on the Japanese front. So we have seen quite consistent improvement over the past 5 to 6 quarters in terms of improvement in the business from them. So could you highlight how much we would have grown in the first 9-month FY24 from these customers? I understand that the base is very low, the kind of base which was there in FY24, but still from a low base, what kind of improvement we have seen?
Harsha, you mentioned talking about what specific area?
Sir, I'm talking about the kind of business that we have received from the Japanese customers. I expect majority of this business is for that Japanese plants only, but still from a low base of FY23, how much improvement we have seen in the first 9 months of FY24?
Yeah. So overall, we have seen about 10-12% growth in Japanese customer over 9 months. And I think as we have talked earlier, the initial quarter, the growth numbers were good. However, last couple of quarters, it has gone flattish. And we are very hopeful to return back on the variety of aspects. There are reasons on that front. There are developments going on which there was some impact of delay on that front and so on. So in general, we are bullish on that. However, this year, so far, 9 months number don't look as per our earlier expectation. However, quite confident that they will return to the expected numbers soon.
Understood, sir. Thank you very much for answering my questions and all the best.
Thank you.
Thank you.
Thank you.
A reminder to all participants, you may press star and 1 to ask a question. Next question is from the line of Jason Swan from IDBI Capital. Please go ahead.
Yes, sir. Thanks for the follow-up. I just wanted to know, sir, your losses at your subsidiary have significantly reduced from 92 million in Q2 to around 3 million loss right now in Q3, which is quite commendable. EBITDA margin also has turned positive, up to 3.5% odd. Now, I just wanted to know, sir, what steps have you taken, for improving this performance? And other thing is, are you seeing any revival in demand also from Romania and Europe? From Europe and China, so that this steps taken towards reducing the losses, or is it only in the cost front?
So one talking about the cost front, we have started tightening our purse there, trying to focus on right product portfolio and improved some of our material yields as well. So all those variety of things were going on, and they started giving result. Second part of this is that we made a difficult call of saying, okay, we need to scale it down in terms of having the right overheads, considering the volume reduction in those markets. So we've adjusted those, worked on reducing those fixed cost type of situation. So combination of that and the third is a material path to all that combined is where we are, on in terms of turning around those cost facilities or making profit there. Now, on the demand side, we are seeing right now, as I would say, towards the end of quarter 3 and quarter 4, we are seeing a positive direction on those. Too early to say how sustainable these are, but fairly confident that work done on the cost side and improving demand should combination give us a good outcome going forward on both these subsidiaries.
Sure, sir. Thanks for that. And so one question I just had, just from an accounting perspective. So in your presentation, the share of profit and loss from your associates, which is CleanMax and Sunstream, has been included in the other income section. Now, just wanted to know, isn't that supposed to be, highlighted, mentioned separately as a line item, or can you club it in other income? Just a bookkeeping question I had.
Yeah, as of now, as you rightly mentioned, yes, it has been clubbed in the other income.
Equity method.
And we are following equity method for taking the associates. So
Okay.
That's what is the correct method as we understand from our auditor also.
Okay.
We'll revisit if required.
Okay, so that can be included in other income. Okay.
Yeah. And it is not significant impact.
Okay, sure. That's all. Those are my questions. Thank you.
Thank you.
Thank you.
A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to Mr. Vishal Rangwala for closing comments.
Yeah. Thank you, and thank you very much for all of you to participate in this conference call. Really appreciate your continued interest, and we look forward to a positive future going forward. Thank you.
Thank you so much. Have a good evening.
Thank you.
Thank you. On behalf of Harsha Engineers International Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.